My guest today on the spot, John Doody of the Gold Stock Analyst. Joining us from Florida now is John Doody. John, good to be back with you.
Hi, Daniela. Nice to see you again, and I know I'm going to see you in person in a month.
And we'll speak about your conference in a bit, but first, last year when we met up in Florida at the end of February, we were looking at the gold price and we were discussing how many were bullish on the price of gold. 1 year later, how do you see gold set up, John?
I remain convinced that gold is headed higher. 2 billion Chinese can't be wrong. And that while we continue to fixate on the U.S. market for gold, that's not the world market for gold. Over half the gold ends up being bought in Asia. And it's only an anomaly that the price is set here in the Eastern world, but I think or the Western world, but I think that'll change over time. And it's already a 24-hour market year-round. And I think, as we've discussed before, I expect that there's a surprise coming from China in April that is basically going to awaken everybody's thinking to China and the desire for China to make the yuan, a world reserve currency. And they're moving in that way in so many different small steps. And I'm not saying it's going to replace the dollar, but I think it could be ultimately a dollar equivalent.
So in speaking with you, John, I know you expect China to report some new gold reserve holdings around April. Bloomberg recently reported that China's central bank gold reserves may be 2.5 times higher than previously thought. Their last reported metric tons were sitting at a little over 1,000. However, Ken Hoffman, part of their precious metals mining team, recently reported that it could be as high as 2,700 metric tons. What do you make of this?
That was a good estimate, and I don't know what the number is actually going to be. We know that they're the world's largest producing nation, and they export nothing. Zero gold is exported from China, and they're a big importer of gold, too. So there's good reasons for that. All the gold that gets bought by the Chinese consumers is gold that absorbs dollars that the Chinese central bank doesn't have to buy themselves. And as you know, that China is a net exporter, and they build up dollar reserves. That's what they end up buying treasuries with. But if they can get their citizens to use the dollars, or the companies to use the dollars to buy gold, and use the dollars that way, that's the money that the central bank doesn't have to buy. So there's good reason for that. But in any case, the gold, we know, is the basis for any strong currency, and that's the reason why I think the Chinese are accumulating at the central bank level.
John, let's talk fundamentals and gold now. I know in the past you've said that the fundamentals are really in place for the yellow metal, but if I challenge you here and ask you, well, look, the U.S. dollar and the stock market both putting pressure on gold, which fundamentals are you looking at?
Well, the fundamentals for the gold mining business itself. Gold supply is probably going to be down this year versus last year. The miners are high grading to the extent possible. They're only producing gold ounces that make sense, and they're cutting back in capital spending. The number of mines being expanded is being reduced. The number of mines not being built at all is being reduced. So, for example, New Gold is not going to build its Blackwater project up in British Columbia, and we're seeing delays all around. So it takes a while for this to be felt in the system. But I think that the net impact is that gold supply from the mining side is going to be lower this year than last. And we already know that part of that's due to the cost of producing gold. The all-in cash cost to produce a gold, including exploration and sustaining costs, is somewhere around $1,200 an ounce. And it doesn't make any sense to try to produce gold if you can't make any money at it.
So it's clear you're liking gold. Are you liking anything else, John?
Well, I like silver. If I like gold going higher, I like silver going higher, because silver is basically a derivative of gold, and it doesn't do anything on its own for any long period of time. And if gold's going to go higher, silver will too. But silver is, as I always like to say, is gold on steroids. And if we get a couple $100 increase in gold price, we'll get, we're talking ounce, dollars per ounce now in silver, but silver will go up by a greater percentage. But gold would be my foremost holding. We have a silver letter too, and we always tell people no more than 20% of their precious metal holdings in silver.
Finally, John, let's wrap things up by speaking about your upcoming conference that you host at the end of February in Florida. I was there last year. Jim Rickards was the keynote. What can investors expect this year?
Well, the reason we have the conference is an opportunity for attendees to meet the top management of our top 10 gold stocks and our favorite 5 silver stocks. So 15 companies will present for roughly 20, 25 minutes. They'll answer questions. Top guys will be there. The keynote speaker is Pierre Lassonde. Everybody knows him as one of the smartest guys in the business. Top guys from the various companies will be there. I don't want to give the top guys all away because that would give away who our top stocks are. But basically, it's the chairman or the president of all 15 companies, and they come and make a presentation. And they also hang around to talk with subscribers and investors. And it's an opportunity to see firsthand the top guys. You know, most of the gold conferences, and there's lots of them, all are focused on smaller companies, smaller explorations. You don't get the top guys from the big companies. The big company guys tend to go to BMO and the other brokerage conferences, and that's something that retail investors aren't invited to.
And now with the recent merger and acquisition vibe in the mining world, John, it might be interesting.
Yes, and interesting that in our top 10 gold stocks, we have 4 companies we've sort of highlighted as takeover candidates, and those are the leading stocks so far this year. They're up 22% for the year, whereas the overall portfolio is up 11%.
Perfect. We'll end with that, John. Thanks so much for being with us. We'll see you in Florida.
Great. See you then. Thanks.
And thanks for watching On the Spot with John Doody today. You can email me at newsfeedback@kitco.com or join the conversation on Twitter at Daniela Cambone. Thanks for watching.